Hello traders, we'll continue our discussion of mastering the best templates, the best ACB templates, and going through 12 months of best template opportunities. Now November was an interesting month. We had an opportunity come up on a Thursday, Wednesday high close of the week on West Texas oil at the end of the month. Again, stepping back and looking at the higher time frames first, everything comes from the higher time frame. And we have a Monday, Tuesday, Wednesday closing as the high close of the week and then breaking outside of a previous weekly high range, closing and breakout on our 4-hour time frame on the Thursday itself. So we have a market that's closed at the high without breaking out and then breaking out the following day. An inside week prior to our breakout, and we come into our US window, remembering that our 4-hour rotations now, typically one of those 4-hour rotations will form an extreme of a weekly high or low. Now, the relevance of that obviously is when we have an ACB template is that that time rotation can give us a coil into a potential reversal on a false breakout. So that 4-hour time rotation, especially on the commodities, energies, remembering that 6 a.m., 10 a.m. is when those time frames will roll over in our 24-hour cycle. Remembering that the important part is building your muscle memory, understanding the escalator or the stair steps up and then the elevator down. Now we're looking at the 1-hour chart and we have our breakout of a previous high of week level, which was the inside week. Tuesday closing in breakouts. Wednesday closing in breakout. And you'll notice the same behavior, breakout, pullback, continuation. Remember I talked in earlier slides about the auction process back and forth on the escalator, which is separating the difference between understanding what an ACB opportunity day looks like. It goes from one extreme to the close of the day. And obviously those are the types of opportunities that we want to hunt because there's zero stress, zero emotion, zero thinking, and when you have an ACB template, zero management once you're in the trade. Now we have our market that breaks out and coiling sideways on our higher time frame as we head into our US window. Now obviously energies can be a bit more volatile than currencies, and same with indexes. We can see a bit more larger candles, that type of situation. And for traders who are not experienced trading these markets, they may seem a bit more intimidating, but again, the same process applies, as well as the same understanding of the templates and of the time rotation and being patient, just sitting on your hands and waiting. The oil market typically in the pit days started trading at 9 a.m. And as we coil sideways, we have our large engulfment earlier in the day, our micro M structure. That's an indication right there that we may have a high of week in place. The market works its way back up into our US window before engulfing in that first hour, 9 a.m. hour. And then our 10 a.m. hour starts and we pump back up into that high of week level and engulf at 10:25 a.m. But remembering, just looking at the template, we have close and breakout. We've broken out of the previous high of week level, the inside week, and now we may be entering into that opportunity with a false break reversal opportunity. When we zoom in a bit closer, we can see the engulfments earlier in the day and the market coiling sideways, and just picturing this volume underneath. If this market breaks down, we've got trapped volume up high for the collapse all the way back down to the low of the day. The market pumps back up and gives our engulfment and a breakdown from that neckline area, and remembering that once this market, if it does collapse, it should move quickly because this volume now will be trapped. So we've got a death line / neckline up high that if this market breaks through and we're in this trade, we can go to break even once it clears that level and closes beneath that neckline. Once we break back inside of our coil, the early starter opportunity is the first engulfment up top with a stop loss placed at the extreme. But if we wait for the close inside of our coil, that still gives us an excellent fill, remembering that this market should move quickly, and just highlighting that the market at 10:25 a.m., 10 a.m., our new 4-hour rotation at the extreme of the week. We have a max stop loss of 50 cents on this trade, and the previous low of day level gives us a $3 profit target, a 6-to-1 trade opportunity. Pump and dump, Wednesday close at the extreme, and then breaking out of the high of week level and the high of day level and coiling sideways into our 4-hour rotation, 50 cents risk on the trade, and a $3 profit target or hold till close, which gave us essentially the same fill, but an ACB template, high of the week, close, high of week, false breakout of an inside week, and the coil into our 4-hour rotation on West Texas oil. Now, something that I want to highlight about November is that on the NASDAQ, the Dow, our indexes, and some of the major currency pairs and cross rate pairs, we did not see an ACB opportunity. Now, there are other trade opportunities, but specifically not an ACB Wednesday close, high of week, high of month, low of week, ACB template opportunity. And something I want to impress upon traders is not looking to force anything because something closes in breakout, and remembering that keeping things simple is the Wednesday close at the extreme. Wednesday close at the extreme is our signal day. There are other trade opportunities, first red day, first green day, 3 days of breakout traders for trend trades, but don't be forcing anything, and remembering the higher time frame is where these opportunities come from. And sometimes sitting on your hands is important, because when you can't sit on your hands and traders get impatient or they get impulsive or they get emotional, that's when you can do damage to your trading account. This is one specific type of ACB opportunity that presents consistently, but you are going to have months where other trade setup opportunities will present, and being willing to adapt and not force your will onto the market. Keeping things simple means sticking to the process, as we talked about in the earlier video. Wednesday close at the extreme. That's the simple basic model. Wednesday high close of the month or week, or low close of the month or week. And then how does price set up on the day? How does that apply in our template? And if that setup doesn't present, don't engage in impulsive, irrational, or emotional self-sabotaging behaviors. Sticking to the plan. ACB templates are designed to be simple and hunt out only the best ones, the best opportunities. That doesn't mean there aren't going to be other opportunities for setups on other days in different sessions. And I want to just emphasize to traders understanding the higher time frame, which we're going to dive deeper into, but in this particular section, not forcing your will onto the market. Now, if we have an ACB template show up on different days, that's fine. And in the emphasis of simplicity, rinse and repeat, the criteria needs to be held to strictly. Closing at an extreme, high of week, low of week, or month in breakout. And then how does price set up on the day? But just reminding traders that when a new month starts, we have a new timing cycle, and we have markets either working back inside of their range for potential continuations, or we have first red day, first green day opportunities, markets that are already in breakout and then sitting on our hands and waiting. Monday, Wednesday, Friday, time rotations. What type of template are we in? Not counter trending markets just to catch the high or catch the low, but positioning ourselves in a market if there's no major red news, managing our risk, and taking profits. But when we don't have a Wednesday close at an extreme, just counter trending a market can be a recipe for disaster. This is a good example of a month. We're looking at December, we're looking at the NASDAQ. We have week 1 non-farm payrolls. We have our consolidation. This is where we talk about the day zero box. And I'm just going to emphasize to traders, part of this is just to explain the monthly cycle, but also not getting caught trying to counter trend markets that are strongly trending, and then understanding just week 1, week 2, week 3, week 4. And if we don't get the ACB Wednesday close at extreme, there are still other trade opportunities, but not necessarily the all-in monkey hammer template. And being patient, being willing to understand that when they come, they will come, they're going to be worth 10 or even 100 times a normal trade that you have 90-10 odds on. But just trying to blindly counter a move because it's in breakout is not what an ACB template is. So when we walk through, we have our non-farm payrolls week. Somebody mentioned recently, they said, it's confusing, all these week counts. And no, it's the first week of a month. Very simple. Non-farm payrolls, week 1, new month, new timing cycle. We have non-farm payrolls, consolidated markets. It breaks out in week 2. We have FOMC on the Wednesday, and it continues to trade higher. Week 3, we think we might get our monkey hammer template, and lo and behold, on the Wednesday, the market reverses and closes back down at the extreme. Very similar to our monkey hammer template, the escalator ride up, but in this particular case, the rotation occurred in the last 4-hour cycle of the day on a Wednesday. Why did that happen? I have no idea. It just is what it is. That's one of those things that when these months happen, be aware that if we don't get that normal template, doesn't mean that we can't still have large moves. It may mean that we happen in different timing cycles, but week 1, week 2, week 3, we get an all-in collapse on a Wednesday. And then we head into our end of the month, our week 4, and we get a first red day signal on our Wednesday, signal day. Wednesday's a signal day for the reversal heading into the new month, starting on the Monday, a new week, a new timing cycle. And you'll notice again the larger pump and dump. But a month that just continued to break higher and trend and did not give us that monkey hammer template on the normal Wednesday close at extreme. We saw a large reversal, and again, the timing of this and the day that it started can set up the larger move into the new month, keeping traders trapped up high. But you'll notice each week breaking higher out of a weekly level, triggering higher time frames into the market and continuing to trade higher before reversing. The point I'm trying to make is that sometimes you're going to have months that do not set up and offer us that ACB template, but there are other opportunities if you're patient and willing to sit on your hands. Now in December, on the very first day of the new month, we had a market close in breakout. Now this is a Friday that's closed in breakout, but I want to review this to demonstrate again to traders the importance of understanding the higher time frames. That's what this is about. And when we break out of weekly or monthly boundaries and we start a new timing cycle, a new week, a new month, how does price set up, and does that give us an ACB opportunity? It's always about hunting out the best opportunities, not just trying to catch the high or catch the low in live time. Remember, these are end of day closing charts. We have our close and breakout on the very first trading day of a new month, and that is a Friday. On our 4-hour chart, we have a market that's broken out and gone to an extreme before having an inside 4-hour candle and then a reversal back, closing underneath our opening candle of the day, our first 4-hour candle of the day when we head into our US session. In our London window, we break down underneath of that opening price level before coiling sideways into our US window. We've broken down back inside of the breakout, and now we're coiling underneath of that low of the first hour of the day. I just want to point out something, that the importance of this particular setup is to remind yourself that you're hunting out opportunities where the market is significantly stacked in your favor. And we have a market that closed in breakout at the highest closing price of the new month. We've broken out to an extreme, remembering that the whole thesis behind breaking out, closing in breakout, is that we now have breakout traders potentially trapped on the wrong side when we get the ACB template. That is the most paramount understanding, is that you have traders trapped on the wrong side of the market. And then when that thesis is correct, it should be heading towards the other side of that range, because that's where the money is. We have traders whose higher time frames stops in the markets. We have higher time frames trading above these levels who are in profit, who now maybe potentially have not taken profit. And when the market breaks out and reverses and coils sideways, it's preparing for a potentially explosive move. And that is the whole thesis behind the ACB model. And then the reason why these trades should go till close is because if they come back, they allow traders who are in the money, who are now in loss, to potentially get out of a losing trade on all time frames, which it will not do in this particular timing cycle for the day itself. Now, we had a market that closed at the extreme in a new month. It went even higher and reversed. It reversed on our 4-hour. We now have 4-hour rotations heading lower. We have hourly rotations heading lower. We have our coil heading into our US window, and our new 6 a.m. candle is coiling sideways into our 8 a.m. US open. We have an opportunity to scale into a position and still manage our risk. We have a level to go to break even at and walk away and let this trade play out. There is no major red news on the calendar, and this is an exceptional ACB opportunity that also broke to the high of the year at the beginning of a brand new month. Now, on this particular trade, we're risking 25 cents from the high of the candles as we enter the peak formation of our 5-minute entry into the coil. This target is a $3.36 minimum to the low of day level. Minimum. That's over 10 to 1. And so this is the type of opportunity, regardless of the day that it shows up on, it fits our criteria. Now, coming back to understanding the simple model, just to repeat this so that people don't get sidetracked, it's Wednesdays close at the extreme. But if you can identify these markets when they close in breakout at an extreme after breaking a weekly or monthly level, these are the opportunities when markets are trapped on the wrong side, or they're trapping traders on the wrong side, that can significantly compound your account. We can manage our risk. We have the opportunity to position into this market before it starts to accelerate. As I said, zero stress, zero emotion, zero thinking. We're just getting in, putting a stop in place, walking away, moving to break even once it breaks a level. Once it breaks a level, and then letting the trade play out. One instrument that did show up on the Wednesday close watch list was the DAX 40 European index. Looking at our 4-hour closing in breakout at the high of the month and the week, obviously, on a Wednesday, heading into our Thursday session. We're already at the highs of the month and the year in this particular case. Market closed in breakout on Monday and then traded sideways on Tuesday and then broke higher on Wednesday, closing in breakout at the high of the month, heading into our Thursday session. Looking at just a simple chart again, visually building your muscle memory, we see the large pump coming at the end of Wednesday in the US window, closing in breakout at the extreme. The market then proceeds to break out again, coiling sideways and into our London open, giving a nice triple top pattern for London traders to have a position in the market with very tight risk heading into our US window. When we look at our coil, London traders again positioning themselves at the extreme with a stop in place, a very low risk opportunity for an ACB template, with the thesis that this now market may break down and coil into the US window. We see the market collapse underneath of closing price and work sideways into our US session. Now, reminding traders this is a European index, not a New York US index. Coiling sideways, all EMAs now aligned, all time frames reversing. Remember, 4-hour and 1-hour are already working lower. We coil into our US session window, we get our pump into the coil and an engulfment candle, allowing traders to position themselves into a market that is now potentially about to collapse and go vertical into that US session, an ACB template. Simple, closing in breakout at the extreme, breaking higher, reversing, coiling sideways, positioning ourselves, putting a stop in place, and walking away. An ACB template on the DAX. Now, one of the things I mentioned earlier, and we'll be moving into the next month, is that some instruments on your watch list and just having a small basket, 6 or 7 currencies, a couple of indexes, a couple of metals, and just monitoring for the ACB template. As I mentioned, there will be other trade opportunities, first red day, first green day, but focusing on the ACB templates, for my sons especially, simple rinse and repeat. If there's no ACB setup, there is no trade. There's no rush. We're talking about scalable opportunities, ones that aren't coming back. And so the willingness and the patience to sit on your hands is paramount, because when these do show up and you've mastered that setup and your understanding of all aspects, these trade setups are scalable in size. We'll continue this in the next video, traders.